Hi everyone, it's Zoran Kresovic here. I'm the head of sales at Eightcap, and for the month of June, I've got a privilege to actually present to you a trade zone. So hopefully it's going to be an enjoyable one for the month of June, and hopefully it's going to give you a lot of idea and potentially trading opportunities. So obviously one thing that I would like to actually mention before I do get started, everything that I discuss, any potential charts or trading opportunities or anything like that, it's obviously not a personal advice. It's a general advice in nature, so it doesn't take your financial nor personal circumstances into consideration. So I just want to make sure that I protect myself. Another thing that I would like to raise actually before I do get started is we are having a little bit of technical problems. So I hope you will see the charts. Unfortunately, I won't be able to engage with you as much as I would love to, but there will be one of my key takeaways for the follow-up meetings and follow-up webinars that I do with you. So hopefully in the future we will be able to actually engage a lot more, and I can relate back to you in terms of the questions and getting a little bit more clarity from you as well. So how about we actually get started? So I've been trading for a number of years myself. I've been involved in the trading game for 10 to 15 years, so it's been quite a long period of time. And what I really want to do today is actually go through the economic calendar here, QAT economic calendar at Eightcap website, clarify and go through the key takeaways in terms of the events that are actually happening this week, and potentially the biggest market movers as well for the week ahead. At the end, what I would like to actually go through is three charts that I think will be most interesting, or something that's actually unfolding. I apologize, in the macro world, and we can go through into more details and also chat fundamental macro stuff, but also engage with the technical side of things as well, because that is actually probably my biggest strength when it comes to the price pattern and time. So how about we actually get started for this week? Obviously, just to recap on last week, absolutely huge week. Like obviously on the local front in Australia, we've had consumer price index, which overshot at 6.8%. Market expected something along the lines of 6.3%, around there. So it's actually overshot, indicating inflation is still running quite hot here in Australia, but also across the globe as well. So in terms of the non-farm payroll data that came out on Friday night, Australian time, out of the US, market participation was, I believe, around 139,000. Jobs are within the 100,000s. The number was absolutely blown out of the park. Like the number came actually at 339,000 jobs created, which is very, very significant, and inflation seems to be quite sticky in the US as well. On the back of that, unemployment rate has actually picked up a little bit as well. But from what we can get and from what we can see, it seems like that whilst we are coming to the end of the rate cycle globally, especially within the US as well, it looks like there might be potentially another 25 to 50 basis points to actually top it off in the US. So let's have a look at what's actually happening for this week ahead. So I'll just go through the QAT economic calendar. I'll pick up the high news events. I'll pick out all the countries, and I'll just click apply. And this week we've got a lot of data, quite a bit of data out of the US. We've got a RBA Governor Loy speech happening on Wednesday. The big one is the Bank of Canada rate statement or interest rate decision on Thursday. And one of the key takeaways as well is the Chinese consumer price index. We obviously received PMI manufacturing data out of the China last week. The numbers were subdued and lower than what market anticipated and expected. And as a result, we are actually seeing a slowdown in Chinese economy, and that's obviously affecting us locally here in Australia as well. But if you have a look at the chart of USD versus Chinese yuan, it's pretty evident that basically USD is actually appreciating heavily. On the local front here, if I click on the data, I can see that the huge one here locally in Australia is the RBA interest rate decision tomorrow. We've also got the retail sales out of Europe. So RBA interest rate decision in Australia, currently it's at 3.85% terminal rate. Market surprised with, or RBA, Reserve Bank of Australia, actually surprised the market with 25 basis points in the month of May. And that obviously shot Aussie against USD upwards on the upwards trajectory, but also it actually depreciated Aussie index. So Aussie equities got sold out on the initial move. However, within that time frame, obviously of 4 weeks, we can see that Aussie equities have actually rebounded somewhat. Now, the one point that I would like to actually point out to you, all of you traders out there, if you are using Acuity economic calendar, if you actually trading the RBA interest rate decision tomorrow and you, for example, want to trade the majors, so Aussie USD, because our spreads are super competitive on the majors, and basically start from zero spreads, you can see the movement or what the market is actually expecting. So there is an actual percentage, there is a forecast percentage, and there is also a true range. So for example, if you click on this here, you can see that what is the sentiment basically within the time frame of 1 hour, 1 day, 1 week, and 1 month from when the RBA actually makes the announcement. And as you can see on the 10 previous occasions or 10 previous events, within an hour, on average, Aussie actually spiked up 1.06%. If you're looking at the daily chart, it's 0.76% upside move. One on a weekly basis, 2.11, and on monthly basis, it's a minus or negative, which means Aussie depreciated against the USD of 0.15%. So great little tool. I wouldn't actually make decisions based on that, but what I would do is actually keep that in mind, because at the end of the day, trading is all about probability of an outcome. The more that you can stack odds in your favor, the highly likelihood or the better opportunity for you as a trader to actually have a profitable trade. Something else obviously to consider is actually the past interest rate decisions, and there is actually quite a bit of news as well if you actually want to have a bit of a read about the macro fundamental stuff as well. So that's Aussie USD. Now, what I would like to go through as well is very quickly is the Thursday's economic calendar, and what we can see is actually there is a Bank of Canada interest rate decision, previously at 4.5%, so terminal rate substantially higher than in Australia, and market is forecasting at 4.5% as well. There is a GDP figures out of Japan, trade balance out of Australia, and quite a bit of other news as well. So it looks to be a packed economic news for the week, ahead of Fed's interest rate decision next week, which is going to be absolutely a huge one, but we're going to worry about that next week when we talk about that. Now let's push on to the first chart. And what I would like to talk to you is actually about US dollar index. So what this is, for those of you that are not quite familiar with it, US dollar is actually a index, is a basket of USD or US dollar versus all the major currencies. And if you have a look at the chart itself, obviously, USD has been depreciating from the highs back in 26th of September 2022, and it's been coming off quite heavily. Now, if you have a look at that $100 level, which is in technical terms quite a key level on the charts, you can actually see that basically it's a round number, and us as traders, retail institutional traders, we love round numbers. So that's an important one to actually take into account, and it looks to provide a key support level. So what I will do is actually I'll add the support level here, because that seems to be a benchmark. Now, if you have a look at the last few weeks, if you have a look at the from start of May onwards, we can see that US dollar has been actually appreciating strongly against the majors, and that is purely on the back of the fact that it's likely that we will have another 1 or 2 interest rate rises. Obviously, market wasn't actually factoring that in. Non-farm payroll is been coming out, and job creations out there were actually substantially higher than what the market anticipated, and as a result of that, it looks like the inflation is actually still running quite hot. And obviously that's moving into, it looks like the flow is actually moving into the US dollar. And what I would like to do now is actually go into the daily chart and provide some more analysis. So if you have a look at the daily chart here, and I always like to start off on weekly chart. The reason for that is it's purely because of the fact that, we got to look at the bigger picture first, and see where we are before we actually narrow it down into smaller time frames. So normally what I would like to do on a bigger screen is I would like to start off on monthly chart, then drop down onto weekly chart, have a look at the daily, and then potentially if I'm trading, I would also like to consider 4-hourly chart for entries as well. So as mentioned previously, $100 level actually seems to provide quite a strong support level here. And also, we can see there is actually quite a bit of resistance as well around the $105. This sideways move has been going since December 2022. So it appears that we've got a sideways consolidation for the past 6 months. Also, what I would like to do is apply a trend line. So from the all-time high, I would like to actually apply a trend line here, which is touching all these major peaks. And as you can see here, this downtrend, long-term downtrend line, and I'm a huge fan of trends, because as they say, trend is your friend, always trade with the trend. So as you can see, actually this long-term downtrend line is actually just touching, the peak itself is actually touching around $104, and it's actually finding a bit of resistance here as well. So it's important to actually take that into account, especially as we actually move into next week with the Fed interest rate decisions. And in terms of the price analysis as well, I am actually quite a big fan of Fibonacci levels as well. So I will apply Fibonacci retracement level as well to see, what is the likelihood of resistance that might appear on the chart if this price was actually to continue going upwards. So if USD was actually to break this long-term downtrend line, then it's highly likely that we might actually see it push all the way up to $105.54. In terms of the percentage, if we are looking at the actual upside, we are potentially looking at approximately 1.26%. So the fact that USD actually made a higher trough here, before that, he actually made a higher peak. The price has retraced, and it's actually climbing backwards up in a nice short-term uptrend. If it was to break this long-term downtrend, then it's likely that the next upside could be potentially 1.26% to that 105 level. Now, as a trader, we always need to consider and take into account the actual downside as well. So speaking of the actual downside itself, if the price was actually to go back down and break this previous trough, I believe the downside could be all the way to that long-term support level. Now that would be 2% and 2.37%. So something for us as traders to actually consider and think is, if you're going long, what is the risk versus reward? Again, on the downside as well, if you're going short, what is the risk versus reward? So as traders, we always need to plan. And, as the famous saying goes, plan to trade as opposed to trade to plan. So that's an important component that I always like to take into account when I'm actually trading myself. So USDX at the moment, short-term uptrend, it's done a healthy pullback and a retracement. It needs to break down the long-term downtrend line if it was to push upwards, and we've still got a buffer of approximately 1.26% to the upside, which is next level of resistance around 105. If for example, it was to break that level again, then highly likely the next level would be around the 50% retracement of the downward range, which would mean that, the price could actually push all the way up to 107.85, which is, quite a juicy upside run of 3.43%. So something to take into account, but obviously macro fundamental news are quite erratic at the moment. There is a lot going around the globe, so it's something to actually consider as well when trading. Let's push to the next chart that I would like to actually talk about, because I'm very time conscious of the time window that we have, and the moderators actually keep me in check on that. So the next chart that I would like to discuss with you guys is Aussie dollar versus USD. And the reason why I'd like to talk about that in particular is because of the fact that it's an interest rate decision in Australia tomorrow. So prior to the CPI data last Tuesday, market anticipated 90% chance of no interest rate hike. So only 10% of potential interest rate rise of Aussie or a Reserve Bank Australia to lift the rates tomorrow. However, post the CPI data, they came actually quite hot. I've actually looked at looked at the data this morning and probability of an outcome, I should say, and it looks like there is a 40% chance that we might see an interest rate rise in Australia tomorrow. So that's quite punchy, going from 10% to 40% as we come closer to the actual decision day. So how about we actually analyze Aussie USD at the moment? And I find this quite a heavy resistance level here. And also I find this level here on the chart a big support level that's been broken. So that's been broken last week. And as we can see, obviously after the low on 31st of May, which was last week, given the fact CPI data came quite hot, Aussie pushed upwards, trying to actually test that previous support, which is now a resistance level. Also, the levels on the chart that I have here in blue, it's supply demand zones. It's quite important as well as a retail trader to actually monitor that, because a lot of institutional hedge funds, banks, when they trade, they take into account these levels as very, very significant. Why? Because they use a lot of times retail money as a liquidity to actually top up their positions and basically push the market in a certain direction. So something to think about there as well. The next point that I would like to do is actually use a trend line. So I would actually like to apply a trend line from the peak back in February all the way down, and we can see clearly a downtrend line. So what I'm trying to do here, guys, is actually paint a bit of a picture on technical front, just to see where we are at this point in time in terms of the technical analysis itself. Okay, Fibonacci levels as well, quite important too. And I'll actually apply Fibonacci levels from the top of the market to the bottom of the market. The reason for that is because I want to see where is the 50% level. 50% in Fibonacci is actually quite an important one, especially if you're looking for that retracement. As you can see, 50% retracement to the downside or providing resistance is actually next to the resistance, natural level of resistance, which is actually a cluster point. So if RBA decides to lift rates tomorrow by 25 basis points, we are highly likely to see an upside run in the Aussie versus the USD, at least in the short term. And if it was absolutely to explode and appreciate quite heavily, then, breaking the downtrend line, we could potentially see the next level here at 67 or 68 level mark. That is the key resistance level on the upside for this pair. Now, again, we got to look at the opposite as well. And if we see that, there's no rate decision tomorrow, even though, 8 out of 25 economists are actually saying that there will be, and 17 are actually saying, top economists are saying there's not going to be an interest rate rise. So if everything comes as expected, the playbook is no rate rise for this month, potentially next one in July, then we are highly likely to see, Aussie potentially depreciate. And this level that was the level of support for the last 6 months will become the next level of resistance. And that's actually something important to note here. And if that was the case, then we would expect Aussie to probably drop back. This would be the first band here around 65 level mark, because there's a bit of a demand, but any further weakness, we would potentially go down all the way to 62 cents and test that level as the major support level for the pair. So that's something to take into account. Obviously, one thing that you need to also consider, guys, when trading is the potential upside, the risk reward, which is what I mentioned previously as well. So let's actually have a measure in terms of that as well. So break above these levels on Aussie, there could be potentially an upside of approximately 2.2 or nearly 3%, but obviously on the downside as well. If this was the level of resistance and we see a clear sell-off, then we would be looking at nearly 2% downside risk. So again, comes down to the risk and money management and how you actually use your strategy when it comes to trading. Just the last point that I want to discuss before I move on to the next pair is I've also on the chart got 50, 100, and 200-day EMA, so moving averages. The price is actually hovering at the moment around the 50-day, and then there is a 100-day and 200-day moving average. So any upside on Aussie breaking above these levels, obviously there is a bit of a cluster with regards to the moving average as well. RSI, 14-day RSI is around the 50 level mark, so it's kind of neutral right now. So something, all this to consider and to think about, obviously ahead of tomorrow, and if you are actually looking to trade. So the most profitable traders that I come across and that I've seen over the years are those ones that can actually time the market, but not only that, manage the risk and money management and obviously psychology as well. So let's just very lastly move on to one of my favorite pairs, or one of my favorite instruments, which actually moves quite aggressively, and that is gold. So if you have a look at the gold versus USD at the moment, and I'll start on monthly chart just for some really important stuff here. We can see that gold is actually appreciated quite heavily over the past few months, and it's actually hitting some key level of resistance. In technical terms, level 1 here, the peak here, and the next peak in March 2022, and the most recent peak as well hasn't been confirmed yet, because the current monthly bar is not lower than the prior bar. But if gold was to actually depreciate, then this would be considered as a triple top. Triple top is actually a reversal pattern in the market, and generally what it means that any reversal to the downside would be 150 to 250% of the prior range, and to do that we would need to actually apply price extension. Now, I'm not going to go into that too much. What I want to do is actually go into the daily chart and weekly chart. And we can see here that, gold is coming off quite heavily from that resistance band. Now, let's apply the support level here as well. And the next level of support on gold as well. And we can see that that approach is coming to that 1,915 level. So we've seen the triple top unfold, hasn't been confirmed yet on this major peak, but we can see here a lot of supply in gold. Now, obviously, gold is a hedge against the risk, and what we're seeing at the moment in the market is we are seeing the US dollar and all the major currencies appreciating on the playbook or on the thesis that interest rates will continue to rise. Obviously, non-yielding assets like gold, it's not quite working out for them because there is more return on investments, if hedge funds, investors put their money in the currencies, because they'll get some sort of a return on investment in term deposit or interest earned on the actual fund sitting in the bank. Obviously, gold doesn't pay any dividends, and as a result, it's not a surprise to see gold depreciate. Yields have gone up as well. So 2 year and 10-year treasury yields have gone up as well. So a lot of flow is going into that as well. And that's one more reason to add why gold is coming off. Now, orange level here is a supply zone. So the blue level here is a demand zone. And from what we can see, it's only natural that that supply zone is actually coming into the effect and gold is actually coming off quite heavily. So what I would like to do is apply the Fibonacci level now. And I want to see what is the potential downside on gold if it was to actually retrace. And if you do that, oops, my apologies. We can see the 50 level is around $1,845. The next level is actually around 38.2%, and that's actually coinciding nicely with $1,900 level. So downside on gold, we could expect the short term potentially to come to $1,900. Break below that, it could go all the way into the range of 50% of the last major range, which should be around 1,850 level. For those of you that are actually quite bullish on gold, in order for us to actually see the bulls continue to go up, we would need to see gold consolidate, continue to go up, break the major resistance, multi-year resistance here, and then obviously, creating new highs, which would be quite bullish. One point that I also want to raise here as well is I would like to actually apply a uptrend line as well on the pair from these lows. And as we can see here, it's coinciding nicely with this level of demand zone. So 1,720. I'm not saying the pair will come all the way to those levels. However, in the foreseeable future, if the inflation data is quite hot and things are running quite, hawkish, and we are seeing the monetary aspect actually tightening across the globe, then it's highly likely, and the interest rates rising, it's highly likely that we could potentially see commodities come off and consolidate a little bit further. Don't forget that obviously consolidation is not a bad thing, and both gold and silver have been actually running quite aggressively over the last few months. So I'll just apply a last pivot point trend line here as well. And as I said, break below 1,920 level would obviously give us scope for gold to consolidate a little bit further. On the upside, we need to see a break the previous all-time highs and continue to go up. And then obviously this whole thing here would be considered as a continuation pattern ahead of the next bull run for gold. And I assume the silver would actually do the same. So that's pretty much it, guys, for this week. We are running a little bit out of time, so I do apologize if I have been talking a little bit too much. I'm trying to consolidate everything and make it worthwhile your precious time. But hopefully, as I said, without any technical difficulties over the coming weeks, I will be able to engage a lot more with you, get a little bit of information from yourself as well, so we can actually build a picture together in terms of some other currency pairs, and analysis. So I would like to thank you all for participating. If you have any questions, feel free to message us. Also, feel free to give me a follow on Twitter account as well and ask questions, or inbox or email us here at Eightcap. As absolutely, I would like to actually take your ideas into consideration for future analysis over the coming weeks and in the month of June. So thank you, and I hope you enjoyed this session. Take care.